You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NiShacks.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how are you doing today?
Hello, doing great. Calling in from sunny California here today.
Quite the time zone difference from last week's episode. How are you holding up?
So far, so good. I had a good night's sleep, so all good.
Amazing. Well, you're a good traveler. You're doing it all the time, so I'm sure your body's kind of used to going through all that. All right, so we've got a lot of news to get through today. So let's start off with rates. Anything noteworthy to talk about here?
A couple of things on some of the major trades. If we start out on the Asia-Europe trade and the end of the peak season, which we have basically been covering the last few weeks. If we look at the quota spot rates from the SCFI, they continue downwards, and we are actually now at a point where into North Europe, we are marginally below the low point we saw in spring here this year. Remember, spring was the slack season after the Chinese New Year. We're marginally below that. It also means we are only a few $100s now above the level in December 23, just before the Red Sea crisis. Now, before everybody jumps to the conclusion and saying, oh my God, we're back to pre-crisis levels, that's not quite true. If we remember back to 2023, the spot rates on Asia-Europe, they actually bottomed out all the way back in somewhere around October. And by the time we came to December, they had gone up by 50% or so from that low point because the rates at that point had become really unsustainably low for the carriers. So they were already in the process of pushing through rate increases just prior to the Red Sea crisis emerging. So, of course, this is a lot weaker on Asia-Europe than what we've been used to over the last year and a half. But it's not, at least at this point, a market where the bottom has dropped out.
Okay, good to keep in mind.
Yeah, exactly. If we then jump across to the other major trade here on the Pacific, what I want to point out this week is not so much on what's happening on the quoted rates. They're still going up slightly, but I would look at the bifurcation we're seeing on the rates actually being paid, so the NIFI rates here. If we look over the last few weeks, there's been a very, very interesting development, specifically when we look into the U.S. West Coast. Because if you have cargo that came either from China or from Southeast Asia, the rates there have continued to slowly erode. Again, keep in mind, these are rates paid for cargo on board, quoted rates. It takes a few weeks from quotes until they're loaded. But basically, what's been paid dropped from around $1,700 per 40-foot at the end here of August, now down to around $1,600 or so, marginal erosion. Interesting part is Northeast Asia, which is basically Korea / Japan. They did not decline. They've actually increased quite significantly over these 3 weeks. Whilst Southeast Asia and China is down $100 per 40-foot, Northeast Asia is up $500 per 40-foot. And it's not just the 40-footers. We actually see the same pattern for the 20-footers, more or less.
Okay.
The question, and we don't see that same bifurcation, by the way, for cargo going to the US East Coast. And I think therein lies one of the cues of trying to understand why this is. Because at the face of it, there can be two reasons for that Northeast Asia market to increase. It can either be a sudden increase in demand, or it can be a contraction in capacity. Now let's logically try to think through the two. If it was an increase in demand, and mind you, demand data always lag, so we don't have hard demand data as it is today, right? If there was a sudden increase in demand from Korea and Japan into the US, one might say, fine, that might be a result of, for example, trade deals, what have you. We can come up with many explanations. But if that was the case, we would expect to see demand increase from Korea and or Japan to both the US West Coast and the US East Coast. And if that was the case, we should see a bifurcation in the spot rates, also to both East Coast and West Coast. But we don't. We only see this phenomenon to the US West Coast. And that tells us it's much more likely that this bifurcation is capacity driven rather than demand driven. Have we seen that before? Actually, we have. We saw that phenomenon in late May, but that was back when we had the force in the China tariff. And the reason back then was not really a change in physical deployment, but a change in the allocation on board the ships, where there was a reduction in the allocation of capacity to Northeast Asia, favoring, in that case, China, but you could potentially also favor Southeast Asia. So for now, at least with the data points we have, it would appear that this bifurcation in rates might be more capacity driven than necessarily demand driven. on the Pacific.
Thanks for walking us through that. I think that's helpful for our listeners to get a sense of how you think through these trends and how you come to conclusions around what is likely causing it. I wanted to ask you, do we see these sorts of bifurcation in rates between the other indices like SCFI, WCI, in the same way that we're seeing with the NiFi?
Not to the same degree. I mean, keep in mind the publicly available, say, SCFI or WCI indices, they don't split it down to that level of granularity. I mean, the SCFI, those are rates out of Shanghai. That's it, right? And for WCI, the closest you can get, you actually can do that with SCFI as well. You can see the difference from, for example, China to the Mediterranean versus North Europe, and the same East Coast versus West Coast. The origin split, you don't really get that from the publicly available indices there.
Okay, gotcha. Anything you wanted to add about the Atlantic trade, westbound or eastbound?
That's a good question. The Atlantic is the third of the major east-west trades. We tend to not talk much about it, but that's because usually compared to the other ones, it tends to be relatively stable. But if I look at the head haul Atlantic, so the westbound one from Europe to North America, it was also very stable for most of this year. If you look, for example, from May to August, with a few variations, it was basically stable around 80-40 foot. But then as we got into August, it became somewhat erratic with a few ups and downs. Now we're actually down to about 1,500. It went down, small bit up, then down again. So we have actually, I would say, seen a marked decrease here in the last few weeks from $1,800 to $1,500. Eastbound, which is the backhaul on the Atlantic, not so. I mean, it's been relatively stable for the past 12 months. Again, give and take a few ups and downs, but basically holding steady. But that the head haul has been holding steady, while clearly the Pacific is eroding, and now also Asia-Europe is eroding. We shouldn't surprise us. The Atlantic has a tendency, we saw that in 2023, for example, to hold firm longer than the other trades. Remember back in 2023 when the market was suddenly in free fall and we ended up with carriers being loss-making in Q4, the Atlantic was actually the last bastion that held firm. It took, depending on where you put a stake in the ground, from 6 to 8 months from most of the trades began a free fall until we began to see this impact the Atlantic. So that might be also the same phenomenon we're seeing play out now again, with the Atlantic holding up firmly longer than the other trades, but we might begin to also see weakness signs there now.
So continuing with the idea of the rates on the Pacific kind of eroding, are we seeing any changes in capacity, in networks and services?
The short answer is yes, we do. And we've done that for a few weeks. Initially, completely as expected, we began to see the carriers announce targeted blank sailings. That's what they always do here leading up to Golden Week. No surprises there. What is worth noting in the week that just went by is an announcement from Gemini, so Maersk and Hapag-Lloyd. They have one service. Maersk calls it the TP9, Hapag calls it the WC6. It's a Pacific service. They had already announced 3 blank sailings, but then they came out with a new announcement basically saying they're just going to completely cancel the service for all of fourth quarter 2025. I don't think this is going to be the last of such announcements from the carriers we're going to see. I mean, if the U.S. trade war continues to provide this negative demand development that we've seen the last 4 months, we should expect more wholesale cancellations of services. They will likely be called temporary cancellations, waiting what happens, but it is more than just blank sailings, some of these cancellations. Maybe also for the sake of completeness, it should be remembered that this service that Gemini is now canceling is actually an addition to their original network. When Gemini launched their network back in early 2025, this service was not part of it. This was a new addition that came later in spring. And this is now the one that's also being canceled. So for those already yearning to ask the question, is this going to undermine the Gemini concept? I would say no, it's not, because this was actually an addition to Gemini's network. Now that addition is being removed again. But for shippers wondering who's going to be mainly impacted, I would say it seems one of the key selling points for this service was a direct service from Xiamen over to the U.S. West Coast. That direct call from Xiamen is now gone again.
Okay. So even though it's a relatively new alliance, having formed at the end of 2024, early 2025, this service in particular is also pretty new and was added after the fact. So seeing it removed is not necessarily capacity overall is being removed. It's kind of going back to the beginning states of where we were at. Let's touch on some tariff news. It wouldn't be a supply chain secrets episode without some news there.
we should do a podcast on Tuesdays rather than Mondays and call it Tuesday Tariffs.
We could do that. Some days we end up doing it anyway because of scheduling. But what's the latest? What are some of the updates that our listeners should be tuned into?
I think let's take the good news first. There were no new changes from the US. In the environment we've been in the last many months, that is actually in the category of good news. No news is
Agreed.
good news. And the thing to watch from the last few days is, I mean, this is not a fact yet. It's again a political process, in this case in Mexico, where there seems to be a development in Mexico to potentially increase tariffs on Chinese imports. Not on all commodities, but a range of major commodities, and increase the tariffs from 20 to 50%. China has not overtly, but at least vaguely indicated that if Mexico does that, then China will retaliate in some way, shape, or form, which is exceedingly likely. We could see this was also the way China reacted to the US tariffs, the US increased tariffs, China retaliates. If Mexico starts to go down this route, it's very, very likely that China will do the same. Should this happen, again, I would basically say for the sake of trade, I would hope not, but should it happen, it would just add additional negative impetus on the development on the Pacific.
Yeah. I think a lot of people were kind of surprised to see the alignment in terms of moving in a direction that the U.S. has been moving, raising tariffs on China. But I think it's also for like the self-interest of Mexico.
Yeah. You can say I don't think that all these different elements can be completely disentangled. I mean, this is where politics rears its head. Realistically, I mean, you also have different political parties, political factions in Mexico, and some political pundits in Mexico are clearly going down the path that this is to protect Mexican production. Others will clearly also see this as a move to try to at least play nice with the US, to try to have better deals with the US. I don't think all of these things can be untangled. This has politics written all over it, no matter how you slice and dice it.
Yeah, all can be true at the same time, and
Yes.
depending on what you focus on. Anything else that you want to talk about related to tariffs or world news in general?
Yeah, the only thing I want to highlight, and I don't want to make it as political, but it's more a matter of this constant uncertainty surrounding the trading environment, particularly in the US. I mentioned there had been no changes in the tariff regime, and that's actually true. That there really hasn't. It's not a major thing, but I think it's worthwhile noting. I mean, a lot of people have seen in the headlines as well. A few hundred workers at the Hyundai manufacturing unit in the US were detained and deported by ICE. I'm not going to go into the politics of that, but I would point out that this has caused a significant uproar in South Korea, both amongst businesses and also at the political level. And the reason why this becomes interesting from the perspective of trade and trade deals is that it's only not even a couple of months ago, it was announced that there was an agreement between the US and Korea, that Korea would make investments into manufacturing of hundreds and billions of dollars in the US. Given this development, it would appear, at least if you follow Korean news media, that this is something that's being cast into doubt, not just by the government, but potentially also by larger companies, that if this kind of thing can happen, would they necessarily be willing to commit to those investments under the current rules and regulations? And of course, that then plays into the overall trade.
Yeah. Okay. Well, yeah, and it was hard to miss the headlines. I think that it's a good thing to keep in mind for our listeners, but it's also important to keep in mind, as you said, no tangible impacts yet on what we're seeing with the tariff rates, but it's definitely not outside of the realm of possibilities, as we've seen some crazy things this year.
Oh, yes.
All right, so let's move on to some USTR fee talk. We're less than a month away now. It's supposed to go into effect October 14th. Can you tell us what's happening with that and any updates?
Yeah, I mean, we've seen CMA CGM, for example, say they will not put on a fee for this. They are phasing some of the Chinese ships out, replacing them with other ships. Two things are people phasing Chinese ships out, and will there be fees? Let's take the ships first. There was actually analysis coming out based on data from Sea Intelligence here over the weekend, showing that on the Pacific, yes, there is a beginning trend where the ratio of Chinese vessels to other vessels, and here I'm talking Chinese built, is slowly beginning to decline. I would assume this is the beginning. There might be more to come, but based on at least the deployment patterns known from the carriers, this is already beginning to be visible on the Pacific. Not necessarily so much on the Atlantic just yet, but I would expect that to also come. Then in terms of passing through the costs, I mean, let's be honest here. The way pricing works in this industry, you can call something a surcharge, or you can say you're not going to have a surcharge. At the end of the day, the market decides. It's no different than all the other surcharges we have out there, be that bunker surcharges or whatever else have you. If the market is strong and in the carrier's favor, then they can put through a surcharge if that's what they want, if there's added cost from USTR. They can also choose not to have a USTR surcharge, but if the market is strong, there's nothing preventing an increase in the base rates to compensate them for that cost. Likewise, if the market is weak, which it actually is right now, then irrespective of whether the carriers call it a surcharge or not, they will be unable to pass through a majority of that cost. So sure, from a headline perspective, it sounds good that there'll not be surcharges specifically related to that. But at the end of the day, whether you call it a surcharge or not doesn't really matter. It's a matter of, can the carriers pass through these costs? And whether they can or not largely depends on the strength of the market.
Okay. So you might not be seeing USTR fee as a line item on your invoice, but is there anything stopping the carriers from, like, maybe FMC regulation that would stop them from saying, like, okay, you know, we're just going to increase the rate of our security fee that we charge at destination for US shipments?
No, but at the end of the day, they probably wouldn't sweep it in under one of the other fees. Let's just throw a completely random number out there. Let's say you phase out most of your Chinese ships. The actual impact is, let's say, $30 per cheap. And mind you, this is a completely random number. It is $30. If it's a strong market, you can likely increase your rate by $500 or $1,000. Are the $30 then eaten up there? Probably it is. Now, you're not necessarily going to see that, and by not having it as a surcharge but as a base rate, you sidestep that whole discussion.
Yeah. Okay. All right. Interesting things to keep in mind. The last topic that we wanted to talk about today was an interesting one. So relating to the World Shipping Council saying that 11%, so about a tenth of cargo, is actually misdeclared or has improper documentation. Can you talk a little bit about why that matters?
Yeah, I mean, first of all, I mean, let's bear in mind it's not the World Shipping Council that has, I was about to say, measured those numbers. It actually comes from various nation states when they are doing port inspections. So this is not a random number based on some sort of modeling. This is actually what was found when there were inspections done across more than a handful of different countries. And is 11% a lot or little? Depends a little on perspective. If you look at it, in the press release coming out from the World Shipping Council with the data, they have data going back to 2017. The data here, the 11% is 2024. The lowest level was actually just before the pandemic in 2019, where we were all the way back down at 6.5%. So this is almost doubled in terms of the problems that were found at these inspections. Is it then problematic? I was about to say if it's because you found a misspelling in a bill of lading, who cares, right? But that's not really the issue here. It's either you have misdeclared cargo, it's faulty documentation, it's incorrect loading. These things are important. Misdeclaration of cargo is one of the reasons why at times you see some of these vessel fires, for example, that go out of control, industrial accidents. Because if you have misdeclared, for example, dangerous cargo, you might stow them improperly and cause a fire, or if you do have a fire, you might risk this affecting dangerous cargo that shouldn't have been in the vicinity to start with. So you have all of these different elements playing in. It is a safety and security issue. What the World Shipping Council then have come out with, I believe it was yesterday or Friday, is a collaboration where they're now working with a lot of the carriers. The carriers that seem to work with World Shipping Council on this represent about 70% of all container cargo moved to use new AI tools to try before loading to pick up on signs that there might be issues, to at least try to reduce this again, which is definitely a worthwhile exercise. Because if we can use this to either reduce some of the fires from starting or reduce some of the fires from growing out of control, could reduce, I don't know, maybe some of these containers that fall overboard, at least if it's incorrect loading, that's the reason. All of this would definitely be worthwhile endeavor.
Yeah, agreed. And at the very least, you want to be ensuring that the mariners on these ships are safe and there's no threat to life or anything. So, it's interesting to see they want to use that AI tool.
It is. I mean, and it's not just a matter of the people on the ships being safe. That's of course important, but it's also a matter of making sure when you have major vessel fires or containers falling overboard, that is a hazard to people around them. I mean, look at the containers that tipped overboard in the port of Long Beach here last week. It was sheer luck that nobody got hurt, especially as some of the containers fell down and hit a barge that was lying alongside the vessel, or the life and safety of not just people but marine animals. If you have containers going overboard with, say, dangerous cargo, toxic chemicals, what have you. So anything that can be done to reduce these incidents is laudable.
Yeah. I think it's probably important to touch on something that kind of came to mind for me, at least, when I first learned about this, was that these numbers are based on 2024 data. So we shouldn't conflate them with tariff-related cargo misdeclaration or anything like that. I think that's an important call out for our listeners.
That's definitely a different thing. And you can say, I would have the hypothesis, I don't know, but I would have the hypothesis that misdeclarations from people that want to try to dodge some of the tariffs would be more unlikely to cause some of these security issues, because such misdeclarations would more likely be down the path of misdeclaring, for example, the value of the cargo, which is one tool that some people think to use, or misdeclaring what is the actual origin of the cargo. Both of which, of course, are fraudulent under U.S. customs rules, but whether the cargo is worth $1,000 or $100,000, that doesn't really change the safety and security situation.
Right. Yeah. Definitely two different things there. All right. Anything else to add for today's episode?
No, I think that's at least what's cooking out in the markets for now. Then I'm looking forward to picking up on not just the ocean part, but also the inland parts. The reason I'm actually in Southern California here today and tomorrow is I'll be participating in IANA's intermodal conference here in Long Beach.
Awesome. Well, if the listeners are in town, I hope they stop by and listen to the panel. You always have some really interesting things to talk about. So best of luck with that tomorrow. And for everyone else, thanks for tuning in. We will be back next week. If you haven't already subscribed to the podcast, we're on Apple Music, Spotify, YouTube even. So make sure you subscribe so that you're notified when we release new episodes. But until next week, have a great one.
Thanks for listening to Supply Chain Secrets Podcast, presented by Nice Shacks. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.